Semiconductor stocks moved higher in after-hours trading overnight, but not all of them. Shares tied to Broadcom, Micron Technology, Nvidia, and Western Digital's SanDisk brand all posted gains in futures trading. The moves suggest investors remain broadly confident about demand for chips, especially those tied to artificial intelligence infrastructure and data centers. The outlier was Credo Technology, a smaller firm focused on high-speed connectivity chips, whose shares fell sharply against that broader trend. Nvidia has become something of a weather vane for AI-related sentiment. The company dominates the market for graphics processing units, the specialized chips used to train and run large AI models. When Nvidia's shares rise, it tends to signal that investors believe the AI spending cycle still has room to run. Broadcom and Micron have caught similar tailwinds, supplying custom chips and memory to the major cloud computing operators, building out their data center capacity. Credo's drop stands apart. Sharp single-stock moves like this one often follow earnings reports or guidance updates that fall short of what investors were expecting. Specific figures were not immediately confirmed, but the size of the decline points to something that rattled the market's confidence in that company specifically. In a sector where growth expectations are already elevated, even a modest shortfall can draw a swift and severe reaction. The split between the larger chip names and Credo illustrates a pattern that shows up often in technology rallies. Broad enthusiasm can carry industry leaders higher, while leaving smaller or more specialized players exposed to closer scrutiny. The bigger names benefit from scale, from diversified customers, and from being seen as essential infrastructure. Smaller firms often carry more concentrated risk, one big customer, one product line, one earnings miss away from a sharp reversal. The semiconductor sector has drawn particular attention this year because chip demand is widely seen as an early signal of broader technology spending. Strong orders suggest companies are investing confidently in their own systems. Weak signals can point to caution ahead. And markets tend to reprice quickly when those signals arrive. The question heading into the regular session is whether overnight gains in the major names hold, and whether Credo's drop stays contained or begins to weigh on sentiment more broadly. A company-specific stumble is one thing. A signal that smaller chip firms are facing broader demand pressure is another, and investors will be watching closely to see which this turns out to be. For anyone tracking the semiconductor space, the practical read here is straightforward. In a high expectation sector, the gap between industry leaders and smaller players can widen fast. Watching how both Credo and the broader chip names trade when the session opens will give a cleaner read on where sentiment actually stands. This briefing is brought to you by First Financial News, clear daily coverage of the economy and markets at firstfinancialnews.com.